We're here with Richard Hayes. He is the CEO of the Perth Mint. We'll be talking about Richard's outlook for the metals markets as well as speculations around the Perth Mint's business that's been going on through the internet. Welcome back to Kitco. It's been a while. Well, how are you, Richard?
David, thank you. It's great to be back with you. Fantastically well. How are you in Canada?
Canada is good. We are, not as sunny as Australia, I presume, but we are in the summertime and you're in the winter, so we can go surfing here, and I imagine you still can. So that was a bad comparison, Richard. I want to just thank you so much for being here. There's been a lot of speculations on the internet from various market commentators around the Perth Mint's business that I'd like you to address today. So thank you for being in the hot seat. And I want to thank the viewers who have submitted questions to me directly. I just want to thank you for contributing to this conversation. So Richard, I just want to give an overview of the Perth Mint to those of us watching right now who may not be familiar with what it is that you do. Can you describe the Perth Mint's business and go through some of your product lines?
Thank you, David. Well, the Perth Mint is a business that's here in Australia. We've been here for 120 plus years now. And our core businesses today are the refining of most of Australia's gold. We also refine some gold from offshore, silver as well. We run a precious metals mint, and we're one of 5 or 6 major precious metals mints in the world. We run a precious metals depository business where we have in the region of 65,000 customers from plus or minus 130 countries. Looking after metal under management of about $5.5 billion Australian dollars. Okay.
Now you did experience a huge increase in revenue from 2019 to 2020, from $18 billion to 23. So could you please comment on what the major sources of growth for revenue were for you over the past year?
David, I think it can be summed up in one word, and that is COVID. COVID disrupted supply lines globally, and what we saw was a significant dislocation of prices, firstly between the London markets and the New York markets and the futures trade, and that created significant opportunities for us. Premiums blew right out, and that certainly helped us along the way, coupled with the overall fact that precious metals are that asset of last resort. When the world becomes concerned about what the future looks like, people will flock to precious metals, and we saw exactly the same thing in the global financial crisis, 2009, 2010. That was repeated very much in 2020. We saw a significant increase in our volumes. They were reflected in the numbers that we publish on a regular basis. And it all came down to uncertainty and people being unsure globally as to what the future looked like as the COVID epidemic rolled out.
Of the $23.8 billion in revenue, can you just give a rough breakdown of the segments of your business in percentages, from refining to contracts with your customers to the ETFs and the physical bullion products?
The bulk of that revenue is clearly trading that we do. Precious metal sales certainly were a large part of it through our Perth Mint depository business. We saw significant inflows and increases into our depository business. Our coin business experienced significant growth in volumes as well. So if you were to look at a percentage, probably of the revenue side of it, and remember, revenue is very much a function of the price of the precious metal. From the revenue side of things, our minted products business is perhaps 15 or 20% of that. Our depository business is probably around another 30 or 40%, with the balance being sales of large bars and other cast bar products to customers globally.
Okay, and let's just define a few of your products here for the audience here. So you've got physical bullion sales is straightforward. What is the allocated precious metals program versus
versus unallocated?
Yes, versus unallocated. What is the difference there?
Well, All right, so the difference is, and this has all gone into in great detail on our website, but I will explain it briefly.
Yes.
For those customers who wish to purchase a particular bar and have that bar stored for them with their name on it in a specific location in our vaults, and we have the largest network of central bank grade vaults in the Southern Hemisphere here in Perth. If a customer wishes to have an allocated bar, a specific bar with a number on it, on a location on a shelf, they will then pay a fabrication fee and we charge them storage on that. To the extent that customers are not really wanting to pay the fabrication fee or pay a storage charge, they are able to buy what we call unallocated metal. This is something that many companies run, and essentially it's buying into the working stock of Perth Mint's overall precious metals inventory. There is no specific bar or specific coin that attaches to that, but overall the pool of precious metals can be in multiple forms within our business under our full control. Customers don't pay a storage fee on that because we obtain the benefit of that metal being funding our working stock rather than having to borrow it from bullion banks where we would pay a lease fee.
And what is the pool allocated program, Richard?
The pool allocated program is where customers will buy into an allocated pool of metal. So for example, there would be 400-ounce large bars or 1,000-ounce silver bars that are in a pool, and customers buy into that pool of metal. It's a pool of metal that's set aside. It's not part of our working stock. It is set aside for those pool allocated customers. The storage fee is obviously somewhat less because it doesn't have to be on a specific vault location or a specific shelf within a particular vault. It's a pool of segregated allocated metal that people are buying into.
So if I were a customer and I wanted to buy some physical metal from the Perth Mint, I have a variety of product options to choose from. Why would I specifically choose, let's say, an unallocated product versus just a physical coin that I could buy on your online store? What is the appeal there for customers?
The appeal for customers is that they don't have to take delivery of the precious metals by buying a coin or a bar and then worry about where to store it. We take care of the storage for them. Clearly, there is a small storage fee that is charged, but the big advantage for customers is that they don't need to worry about firstly taking physical delivery and then storage, safekeeping and security of that product once they've taken delivery.
Okay, and there's also a gold ETF that is managed by the Perth Mint. Can you talk to us about that?
Yes, so we have a listed product on the Australian Stock Exchange, and people are able to buy into that through their broker in the normal way that you would buy a stock or a share. We launched that product probably 18 years ago or 19 years ago, and it has slowly grown over time for those customers that prefer to transact through a broker.
Okay, and the metals behind that gold ETF, is that backed by metals stored in the Perth Mint vault, or are you using any other metals from other bullion dealers?
No, it's backed by metal here at the Perth Mint. And what I would say as well, David, just for clarity, all of the metal that we have for all of our customer base, whether it's allocated, pool allocated or unallocated, is all covered by the state government of Western Australia's AA plus or short-term A1 plus Standard & Poor's guarantee.
Okay.
So irrespective of the storage program, it's all covered by that government guarantee.
Okay, let's take a look at some of the posts that have been circulating online and the Perth Mint's response thus far. So on March 17th, the Perth Mint issued a blog post called "No Silver Shortage at the Perth Mint." So I'm just going to read the first two paragraphs. Social media chatter about a shortage of silver should be treated with a healthy dose of skepticism. While the Perth Mint is currently experiencing increased demand for its products and services, customers can still invest in leading Australian silver bullion coins and in pool allocated or unallocated silver via our depository. Can you explain why you issued this statement and what exactly was this statement a response to?
The statement was issued in the very early days of the chatter in the blogosphere around apparent shortages of silver at the Perth Mint. If you recall, there was a run, global run on silver, prompted to some degree by the Reddit group. That caused quite a number of dealers to suspend, especially in the United States. That caused a number of dealers in the United States to suspend sales. And it caused, as these things always do, the start of the rumors that there was a global shortage of silver. We put out a statement because there was some chatter at that stage on the blogosphere that Perth Mint had run out of silver, which was completely untrue. And we put that statement out to assure and reassure our customers that we did have silver for sale, and they were able to come and still buy the silver. We also said that it might not be in the form that they would like it, but that we certainly did have silver available if they wanted it in a specific form. So a 2-ounce bar or 1-ounce bar, there would be a manufacturing lead time. We are a major refiner. We're one of 5 or 6 global refiners. We're also a major mint, and we refine probably 350 tons of gold a year and about the same in silver. We produce multiples and multiples of millions of coins and minted bars every year. And because of that, we have production schedules. We can't just stop to produce 5, 2-ounce bars for a customer. There's certainly always been 1,000-ounce bars or silver kilo bars, which are usually available for customers, but 1,000-ounce silver bars are always available for customers who wish to purchase physical silver, either into our depository or to take a physical delivery.
Well, there was some chatter from the internet and on various social media that clients could not take delivery of 1,000-ounce bars, and they had difficulty receiving those bars. Is that? Can you confirm or deny those allegations?
I'm not aware of, other than what I've read on the blogs, I am unaware that any customer has approached Perth Mint and we've been unable to supply silver. Having read many of these posts, the ad hominem attacks are very difficult to answer without specifics. I'm certainly unaware of any customers who came to Perth Mint and wanted or were prepared to take a 1,000-ounce bar who were denied that opportunity. Certainly there have been customers who've come and they've wanted silver in a specific form, and there's been a waiting period for that, and it's a fabrication manufacturing lead time for those products. But the physical silver has always been here, and customers have been able to take those 1,000-ounce bars immediately, and we have sold multiples and multiples of thousands and thousands of 1,000-ounce bars.
Okay, so one of the allegations against the Perth Mint is that the Perth Mint does not have enough metals in their inventory to cover all of their synthetic programs. So suppose Richard, I were a customer of the unallocated program. Would I be able to convert any amount of my unallocated holdings under my name to a physical product if I wanted to?
Absolutely, categorically yes. Depending on the product that you're looking for, there may be a manufacturing lead time for that. Whilst that particular product is manufactured for you if you hold unallocated. So the steps are that if you're holding unallocated and you want to take delivery, you then have to allocate, which means that it's got to be turned into a physical product, and then delivery is effected. If you have silver and you're prepared, if you have unallocated silver and you wish to take that as physical, and you're happy to take 1,000-ounce London Good Delivery silver bars, that is available in real time.
Okay. Now, if I were to say to you, Richard, I think that the Perth Mint is running a so-called fractional reserve bullion model, which basically means that the Perth Mint does not have enough inventory to cover all of the synthetic program. Only a percentage of that is covered. and the rest could be, it could be just basically paper trails. How would you respond to that?
Well, David, firstly, I would say that none of our products are synthetics. In other words, we don't deal in futures. We don't deal in hedges. We only deal in physical product. So there is no paper silver per se. We don't sell an ounce of silver unless that ounce of silver is in the system. So there's no synthetic nature about any of our programs. They are all 100% physically backed. Secondly, in terms of the actual metal within the Perth Mint, our accounts are published annually. We're probably one of the only precious metals businesses on the planet to publish the level of detail in our accounts globally. Nobody else publishes the level of detail in their accounts like we do, be that other refiners, be that other mints, be that other precious metals dealers. We are more transparent than practically anybody else in this business. And when you see these ad hominem attacks that are made through the blogosphere, it does make me wonder as to where people are obtaining their information from, what's being fed to them by perhaps those that are looking to gain some market advantage over Perth Mint by besmirching the name of Perth Mint. Now, just in terms of the accounts themselves, if you look at our accounts for 2020, these are fully audited accounts, audited by the Auditor General of Western Australia, and the Auditor General of Western Australia outsources that external audit to Ernst & Young. We also are subject to a strenuous internal audit program run currently by PricewaterhouseCoopers. So we have both those big four firms that are involved in the publication of our financial statements annually. Now, if you look at our financial statements for the year ended June 2020, we have a fiscal that runs from July through June. And you look at the metals that we have, which is covered in Note 10, 886. Sorry, the inventories that we have,
5.9 billion.
Which is covered in Note. Yeah, it's a $5.996 billion of precious metals that we have, that we've counted, that we've inventoried as at June 30. So that $5.996 billion worth of precious metals is subject to full audit and full inventory count. You then go further down in our balance sheet and you look at precious metals borrowings, non-interest bearing, which is item number 20 in the balance sheet. And that shows $4.676 million. That is all of the metal that we owe to our depository customers, whether they are purchasing metal through our a stock exchange product, whether they're purchasing that metal online, irrespective of how that metal is being purchased, that is the liability that we have to our global customer base as at the 30th of June 2020. So the 4.6 is clearly less than the 5.9 or the 6 billion, just in round numbers. So clearly there is more than enough inventory, physical inventory, which is subject to audit count at the Perth Mint for all of those liabilities to be met.
Okay. Now, if I were to, so the pool allocated accounts, the unallocated accounts, and the allocated accounts, which of these line items on the balance sheet does that go under, Richard? Is that part of the 4.67 billion in precious metals borrowings?
Allocated metal is not recorded on our balance sheet in accordance with international financial reporting standards, because we do not have an accounting liability because that metal is allocated. It's on a specific shelf with a specific customer's name against it. In the same way that if you have your car in for repair at a service station and financial end of year comes, the auditors come and they count all the stocks or whatever in the workshops. They don't count your car as part of the garage's working stock, because that is your car. It's got your registration tags or registration plates on it.
Right.
In exactly the same way, our allocated metal has a specific customer name on it at a specific location in our vaults here in Perth. So that precious metals borrowings, non-interest bearing, consists of all of the pool allocated metal, which can't be allocated to a specific customers. It is a group of customers that own that. And then the unallocated metal, where customers have bought unallocated metal as part of the working stocks of Perth Mint. Both of those are part of that $4.6 billion liability that we have on our balance sheet.
Okay, that's part of the $4.6 billion liability. All right. So the unallocated.
That's the total. That's the total of the $4.6 billion liability. It's non-interest bearing.
How large is the unallocated, approximately, Richard? How large is the unallocated account in total at the Perth Mint right now, in dollar terms?
Well, we have 65,000 odd customers. I can't give you an exact number of those customers who have unallocated versus allocated. We have customers who've bought into both programs. We have customers that have allocated a coin or bar, plus they have some pool allocated, plus they have unallocated metal as well. And what that does is it allows them to, in their minds, and the risk profiles are different for every customer, it allows customers to spread their holdings with the Mint across those three product groupings. So where we have non-interest bearing, the $4.6 million, that is metal that we are not charging any interest on. That is metal that is part of our working stock.
Okay. Now, just to play devil's advocate here now, and please correct me if I'm getting the math wrong. Suppose you mentioned earlier, if I'm correct, the unallocated metals deposits are on a different shelf. They're sort of an off-balance item, off-balance sheet item. If I were to add that, the allocated products. I apologize. The allocated products. Yes, the allocated products. If I were to add that to the $4.67 billion in liabilities, could it not stand to reason that the liabilities then would then exceed the $5.996 billion in inventories? Is that possible?
No, because the $5.996 billion in inventories excludes allocated metal. In the same way that the inventory taken where your car is at the repair shop is not counted as part of their year-end inventory, metal where we hold it on a shelf in our depository with a customer's name against it is not counted as part of our inventory at year-end.
Okay. Now, the Perth Mint did issue a statement on the 21st of May, a message for our depository customers, and much of this statement has already been covered in our conversation just now. I just wanted to go over a few particular lines to clarify with you, Richard. Now, the 5.983 precious metals inventory, that is a slightly different number than the 5.96 on the balance sheet.
Yes.
Can you clarify that?
Because included in that number, and these were very high-level numbers that we published on that date that you just mentioned, included in those are finished goods of 12 and consumables 12 million and consumables of 2 million. So an extra 14, which is the difference between the two, comprises of finished goods, the value add component of finished goods, and a small amount, $2 million of consumables that we keep on hand to run our business.
I understand.
So very, very small amounts, but that essentially is the difference between the two.
Now, there is a line item at the bottom that says precious metal owing to Perth Mint by its customers, for example, consignment stocks or advances to mining companies, where the metal has been priced but not yet processed, and precious metals inventories held at the Perth Mint, less metals held in the NYSE. Can you explain what that means and how that relates to the inventory items stated in that table above here? Does it, if I'm interpreting this correctly, does it mean that not all the inventories on that, as part of that $5.98 billion, not all of those inventory items are physical metals in the vault? Some of them could be receivables. Am I correct or incorrect there?
The 5.9.
Basically, what I'm trying to get at, Richard, is the $5.98 billion, which is, according to your statements, it's metals marketed at fair value. Is that all
Correct.
Physical metals in the vaults owned by Perth Mint, or could some of that be receivables from maybe your suppliers or for unrefined products?
So that comprises of two additional amounts. One is advances to refining customers, where we have received the metal from the mine site, and we have advanced. The customer has priced that metal, and we've provided an advance to the customer in advance of the refining process being completed. The way the markets work here in Australia, and I think they probably work this way globally, is that all refining settlements are done typically on a T+2 basis. So we receive the metal today, and in 2 days' time, we will provide the customer with payment for that metal. It's in our custody, so we physically have it, but we haven't refined it yet. The final refining, that takes about 10 to 12 working days. And once the refining process is complete, then we have that metal in a form that is then a saleable product. So typically that's an advance given to customers prior to the refining process having taken place, but we have physical custody of the metal. The second part of that is where we have stocks with customers, and these are all customers where the stock is either secured by a banker's guarantee or a cash deposit, or in a few cases where the customer is deemed to be credit-worthy. In other words, they have an S&P credit rating, where the stock has been provided to that customer on a consignment basis, but that stock has not yet been priced yet. And that is all that is covered. If you go to our accounts, what you'll find is that that is explained in the notes to the accounts, that metal has been provided or advanced to customers by way of consignments, and that metal has not yet been priced. So that's a fair value at June 30, and then we value that. So the price exposure is not with us because that metal hasn't yet been priced.
Some of the concerns that clients may have is that the Perth Mint does not have enough of their current assets to cover their short-term obligations. Now, I can see that on the balance sheet itself, that you've explained it. That itself is not true. However, market commentators have indicated that the Perth Mint is or has been short $1 billion of metals. Can you just comment on what they could mean by that?
Well, I have no idea why they would be saying that we're short $1 billion. If you look at the metals items on our balance sheet, the audited balance sheet as at June 30th, 2020, you look at the liability section, the $4.676 billion non-interest bearing that we owe to customers, and then the interest bearing metal, which is note 17, the $1.721 billion. That's typically metal that we have borrowed from bullion banks. There's not enough metal in Perth Mint Depository Unallocated to fund all of our working stock. Remember, we are a major business, but one of the largest in the world. So we borrow precious metals from bullion banks in the same way that most sizable precious metals businesses on the planet do. So those two, the 4.6 plus the 1.7, gives you 6.4 billion dollars. And if you then look at the offsetting assets, so that's what we owe the liabilities, the offsetting assets, the $5.99 billion. plus the trade and other receivables, the $886 million, there is not $1 billion worth of shortage there.
Where does the
Not
Perth
by any
Mint?
manner or means.
Okay, all right. Thanks for clarifying that. Where does the Perth Mint borrow their metals from? You said there's not enough. Yeah, please.
So we borrow metals from a range of international bullion banks. We don't typically talk about our customer relationships, but it's the usual suspects. The global bullion banks, the largest bullion banks out there, we have substantial relationships with them. We have active lease lines with them. We have active trading lines with them. And we borrow metals from those banks. We lease metals in the same way that any other precious metals business of any size and any repute would borrow. We borrow ounces and we repay ounces. And that's the $1.7 billion that is listed there in note 17.
Okay, and the I think one of the concerns from clients is that, especially during the pandemic, there were logistical issues throughout the world, not just for the Perth Mint, but basically every single bullion dealer on the planet for a short period of time. And now, of course, when that happens, is it possible that these counterparties of the Perth Mint would not be able to deliver physical metal to the Perth Mint's inventory? And so, if there were a run on the bank, so to speak, the clients wanted their unallocated and allocated products converted to physical, you wouldn't have enough inventory on hand to cover those demands. Is that a significant risk, Richard?
No, it's not, because we always have sufficient inventory within the system to cover our liabilities. Clearly, there is a small tradable position at the end of the year where within limits we are either long or short, as any precious metals business would be, as any trading business would be, but essentially, there is sufficient precious metals within the overall Perth Mint system to meet all of those liabilities, whether they be liabilities to our depository customers or whether that's liabilities to bullion banks.
Are customers insured by any contracts, either with the Perth Mint or from insurance from the government, should there be insufficient inventory to cover their conversions? Would they have insurance on that? Suppose.
Well, David, there are two elements that I would like to talk about. Firstly is the government guarantee. All of our liabilities are covered by the state government guarantee in Section 22 of the Gold Corporation Act. There is no other precious metals business on the planet that has an overt government guarantee such as we have, and we take that guarantee very seriously. We are part of a state government. We're not a privately owned firm, a mom and pop shop where you're taking a risk on private management or private owners. This is a risk on a highly rated sovereign government. Secondly, all of our metals are comprehensively insured. And that's not only against physical loss, but that's also against fraud. So we purchase significant amounts of insurance every year to comprehensively insure our precious metals, and that covers both the fraud side of things and any physical loss. And we make sure, furthermore, that when we enter into our arrangements with the Lloyd's syndicates in London, and again, I'm not at liberty to talk about which syndicates, but when we insure with Lloyd's of London, we make sure that the same syndicates are insuring the physical or the specie risk and also the crime risk, so that we don't end up with an argument with, well, this was a physical loss. No, it wasn't a physical loss. It was a crime loss or it was a fraud. The same syndicates are providing that umbrella coverage of insurance for us, so that we don't ever have the possibility of that gap.
I just have a few more questions and we can wrap up.
Please.
I'm just looking at your certificate program here, where the arrangements with the clients are made. Under 2.4 unallocated precious metals, I'll just read the statements here. The client, yes. A, the client shall own as an owner in common with other unallocated precious metals clients an undivided interest in Gold Corporation's pool of precious metals maintained in unsegregated storage on a fungible basis without specific identification of the client's unallocated precious metal. And this is the second one is interesting. Gold Corporation may use all or a part of the client's unallocated precious metals solely to fund the precious metals needs of Gold Corporation's operations. Can you explain what that means? Why would the Perth Mint need to use the unallocated precious metals program to fund its operations?
Okay, so because we're a major refiner of gold, we're one of the largest. We refine the vast bulk of Australia's gold, plus gold from elsewhere in the world as well. About 350 tons a year. And if you're paying the mining companies on a T+2 basis, and the refining process takes 10 days and then another couple of days to sell that metal, obviously there's a funding gap between the two. And that funding gap is the difference between what we're paying the mining companies and then the sale proceeds that we would receipt when those goods are sold. And in the same way as any business, there is a working capital requirement. Every business has a working capital requirement in the same way Perth Mint does. Rather than borrow money, convert that money to ounces and then sell the gold and reconvert those ounces back to money. We take in unallocated precious metals, which are ounces that customers have bought with us, and we use those ounces to manage our working stock. What we don't do is use those ounces to enter into derivatives. We don't use those ounces to provide consignment stocks to customers outside of Perth Mint. Those stocks, those unallocated stocks, are used for Perth Mint's internal working stock, work in progress, working inventory management purposes.
Okay. Would you
categorically?
the metals in the unallocated program, or perhaps the allocated program as well, before they're being converted, would you consider lending that amount or the stock to other customers?
Not customer metal ever.
Okay, I believe that is actually one of the line items here in this agreement. It says the Gold Corporation shall not short sell clients unallocated precious metal nor lend client unallocated precious metal to third parties. So there's no hypothecation.
That is entirely consistent. Yeah.
There's no hypothecation going on.
No. There are no synthetics, there's no lending, there's no short selling, there's no derivative trading involving customer metals in any sense of the word at any time.
And just very quickly, if someone wants to observe the details that you just referenced, where could they go? Where specifically on your website could they go, besides your annual report?
Well, the annual report essentially is a third-party view, an expert third-party view provided by those two big four accounting firms that I spoke about of where we are at the end of June 2020. So it's not what Perth Mint are saying or what Richard Hayes is saying or what management here are saying. These are audited accounts produced by and signed off by the Auditor General with those audits and the audit work and the inventory confirmations and the client confirmations signed off by Ernst & Young.
Okay.
This is not Richard Hayes signing it off. This is a big four accounting firm signing this off. That's the best source that they can go to. Clearly, there are other references on our website where we explain as part of our Perth Mint depository business, and you've read some of those to me against our certificate program. We do clearly explain all of this in terms of how the business operates and what the metal is used for. But if customers are wanting further external third-party confirmation and comfort, they need to go to the audited accounts that lay it out in detail. Okay.
And finally, Richard, just to give a quick outlook for the metals industry. Now, we've seen high, or rather elevated levels of retail demand this year. Do you expect it to continue? And what is your view on the premiums of bullion products? Can they normalize, or will they stay elevated, in your opinion?
That's a very, very good question that does get asked of me on a regular basis. Not having a particularly clear crystal ball, what I can say is that given the amount of money printing and the debasement of fiat currencies globally, the demand for precious metals and their attractiveness as an asset class are biased towards the upside. There can be little or no doubt about that, given that sovereign debt in the US under Donald Trump came close to doubling. It was $15 trillion US debt when Donald Trump took over. It's now surpassed $30 trillion with the latest stimulus packages that President Biden have put in place. And you can't continue to print money, which is essentially what stimulus packages are, without it debasing the value of those fiat currencies. So the role of gold in modern society is as strong now, I think, as it's ever been. There will be peaks and troughs. There will be peaks of demand, often driven by sentiment or perhaps driven by other geopolitical factors. I see the price of gold, has fallen overnight, but that was largely around the FOMC announcements yesterday by the Fed in regards to interest rates. They've been unwilling to even contemplate talking about interest rates, but now they're contemplating talking about interest rates, which is a subtle movement. I do appreciate that, but for the first time in a long time, the FOMC actually indicated that they were prepared to think about talking interest rates. So you saw the price of gold fall on the back of that, but you also saw the stock exchanges fall as well. Very, very early days in terms of what all that means, but the underlying macroeconomic fundamentals for gold remain very strong.
Okay. Premiums,
on the other hand, premiums have been driven up over the last 12 months, 18 months, largely because of COVID. The supply chain, supply lines have been severely restricted. A lot of flights, especially in the early to mid days of COVID, didn't take place. There's certainly far fewer passenger flights around the world now than there've ever been before. And if you go to Google Earth and look at the Mojave Desert, you will see, acres and acres and acres and acres of parked up planes that are no longer flying. So there's no doubt that supply chains have been affected. And what that has tended to do is push metals premiums up. So in terms of the immediate future, I think those premiums will still stay at current levels or perhaps slightly below current levels before reverting to a more time-based mean as the world starts to open up again, as the vaccination programs roll out and do become effective. But who knows exactly when that is going to happen, because vaccination rates, whilst they might be great in the United States and in some of the OECD, the real problem is not in the OECD or the Western world. The real problem really lies in the second and third world. We've all seen the dreadful scenes in India. At least one province, if not more, are fully in lockdown in China at the moment. And that also has an impact on global sentiment, and that feeds into premiums. So, the short answer on premiums, David, is largely around when supply chains fully free themselves up, and when the vaccination program has had chance to be rolled out to a far greater portion of the world's population. You saw what happened in the G7 Plus last week, where the G7 committed to providing significant increased support to global vaccination programs.
Okay. Richard, I think I've put you in the hot seat for long enough. Thank you very much for coming on today. I do appreciate your time and your insights and your outlook on the markets as well. Thank you.
David, you're very welcome. It's been great to talk to you.
And thank you for watching Kitco News. Stay tuned for more.